Hey everyone, welcome back to the channel. Today we're going to be pulling back the curtain and explaining how exactly our short-term forecast works. Just like we did with the long-term forecast video, we're going to be starting with the basics and then moving more advanced as we go on. By the end of this video, we hope you understand the logic and why exactly I use this model for all my short-term investing tactics. Let's go ahead and get started. First of all, you need to understand that every single stock falls within a specific stock sector. You can actually trade these stock sectors via what's known as a sector ETF. For example, if you want exposure to the technology sector, then you can buy the technology sector ETF XLK. Now, here's where things get really cool. These sector ETFs move in interesting patterns in relation to each other, and those patterns give us real information about how investors currently view the US economy. For instance, if we look at how a consumer cyclical ETF that's composed of companies that sell stuff that we want to buy has been performing against a consumer defensive ETF that's composed of companies that sell stuff we need to buy, then we get a good sense of how investors currently view the trajectory of the US economy. The strategy of moving your money from one sector to another is what's known as sector rotation. And that's exactly what WitFin is designed to do. It's designed to predict these market sector rotation dynamics to help you keep a steady portfolio position and reduce the overall risk. It does this by using a machine learning algorithm we've developed internally to find persistent and emerging patterns as well in historical data. Okay, so how exactly does WitFin make these predictions? Let's jump into the intermediate explanation to go a bit more into detail. Okay, so to start, the model looks at key leading economic, technical, and proprietary metrics over the last 20 years. We then feed all this data into what's known as a machine learning regression model. And the model's job is to predict the returns of that specific stock sector ETF in the next month. To make sure the model's reliable, we split the data into 4 sets. The training set is used to teach the model. The validation set is used to provide feature selection. The testing set is used to check the performance on data the model's never seen before. And the prediction set is used to provide the data that feed the forecasts you see on the website every single day. Finally, we run a simulated trading strategy on the test set predictions to ensure the model can consistently generate market-beating returns. Now for the advanced part. If you've worked in this space before, or you've done something similar trying to do something yourself, you've probably run into this, or you run into it and you didn't realize that's what it was, and this is why it failed: model selection bias. It's the most pernicious little issue with financial machine learning, and it's a real problem, and it's really hard to address. So what happens is you choose the model based off of your performance on the testing set data, which really looks great, and you think you struck gold. You go out into the real world and you try and trade off of it, and then it's a dud. You're like, what happened? My statistical testing and everything was robust. The truth is, you tested your ability to generate a single model, not your ability to generate consistent models that consistently outperform over time, right? And that's exactly what a proprietary Daedalus system is designed to counteract. And we'll give you a bit of the juice here. Daedalus runs thousands of backwards-looking WitFin models in parallel, just to start, right? And then it runs walk-forward simulations on sequential holdout sets over time to test how WitFin would have performed on data it never seen before moving forward sequentially, right? And this gives us the best sense we can on how WitFin would have performed in the last 2.5 years. So it's a 2.5 year sequential holdout period that we're moving forward over time with in a 6-month time frame. And this simulation gives us the most realistic estimation of how WitFin would have performed in the real world. You don't have to take my word for it. You can see the backtested performance by going to www.witfin.com/backtested performance. And to see our most recent short-term forecast, just like always, you can click on that markets forecast button on our homepage and it'll take you right there. We look forward to seeing you on the website. If you learned something, please hit that subscribe button and the bell icon so that you're notified when our next video comes out. We hope to have more. Maybe we'll have one on the economic data not coming out because of the government shutdown, depending on when the government shutdown ends. Thank you.